What excites you the most about rural India investment theme right now?
Rural India is transforming. Over 60% of the population of India currently resides in rural India. Government spending has been massive on the rural infrastructure side. There is a metric where in rural India per capita GDP crossed $2,000.
How do you intend to identify the companies that truly benefit from rural growth?
When we think of rural India, we think of agriculture. But we are looking at beyond the agricultural space. We are actually looking at
India's rural economy is evolving beyond agriculture, driven by rising consumption, infrastructure development, and policy reforms. In today's special segment, we talk about the new fund offer, Kotak Rural Opportunities Fund, with Mr. Arjun Khanna, fund manager at Kotak Mahindra Asset Management Company Limited, who will share his approach to identifying rural-focused opportunities, managing cyclical risk, and building a portfolio which is aligned with long-term growth. Welcome to the show, Mr. Khanna.
Thanks, Asna.
So, Mr. Khanna, first of all, can you please briefly tell us about this new offering by Kotak Mutual Fund, which is Kotak Rural Opportunities Fund?
Sure. So we at Kotak are very excited at launching the Kotak Rural Opportunities Fund. So this fund aims to generate capital appreciation by investing in companies which are invested in sectors which are primarily in the rural and allied businesses. The investment universe is pretty broad. It includes agriculture, but also includes manufacturing, services, including financial services, and a lot of other segments like consumer goods, consumer durables, etc. The fund will follow a flexi cap approach. It will have large cap, mid cap, and small cap stocks, and the benchmark for the same will be the Nifty Rural Index ERI.
So, what excites you the most about rural India investment theme right now?
So it's actually pretty interesting. Rural India is transforming. And if one thinks about it in perspective, over 60% of the population of India currently resides in rural India. This transformation has a number of factors to it. If one looks at the strategic and structural tailwinds, it's very interesting. Government spending has been massive on the rural infrastructure side. Think roads, think water, electricity, housing. In addition, we are seeing rising rural incomes. In addition, we are seeing employment move away from solely being agricultural in rural India towards many other sectors. We are very positive on the consumption boost which is expected to come. There is a metric where in rural India per capita GDP crossed $2,000. And history suggests that when this metric is crossed, we do see discretionary consumer consumption pick up substantially. Hence our positivity out here also. In addition, we are seeing digital and financial penetration within rural India. Inclusivity is increased. So if one looks at mobile data consumption in rural India, banking penetration in rural India, and even the formalization of the rural economy, it's all on an increasing trend.
Right.
There are, in addition, a lot of short-term triggers. The first trigger, what I see is obviously the monsoons. We have gone through a very good monsoon season. We expect a very strong Rabi season. And we are seeing a cyclical upturn in a lot of rural demand parameters, such as, say, tractor sales or even two-wheeler rural sales. So in a sense, that is obviously a clear positive. So this confluence of long-term demand trends, coupled with we are seeing short-term triggers, we do anticipate that the rural economy should do extremely well over the near to medium term. And hence, we are extremely excited about the multi-year opportunity that this may set up for us going forward.
Mr. Khanna, how do you intend to identify the companies that truly benefit from rural growth beyond the obvious names?
So when one looks at rural India, and I think a lot of us, when we think of rural India, we think of agriculture. But we are looking at beyond the agricultural space. We are actually looking at the entire gamut, the entire universe, which includes sub-segments such as manufacturing, construction, financial services, etc. So how do we go about it? Firstly, it's about identifying the key rural companies. So analyzing company disclosures along with annual reports, etc. Also looking at the distribution footprints of companies and doing a lot of channel checks to assess the rural exposure of companies. In addition, we would be looking at a lot of the rural proxy indicators which are available, such as, for example, sales or finance sales of products in rural India. There are a lot of government and private data sets available which explain what's present in rural India, especially in terms of consumption and production. Lastly, when one thinks about this, when one analyzes, a lot of people think we would be only in agricultural theme. But if one looks at the portfolio, we would have large, mid, and small caps, and we would not have solely exposure to companies which are just the headline names in terms of FMCG or in the agri segment.
Can you also walk us through your investment process for this fund? What will be the key filters or the criteria that you would use?
Sure, and I think that's a very interesting question because we do get asked whenever we launch a fund. And essentially, the way Kotak manages equities, we have a similar thought process for all equities which are actively managed. And our theme or philosophy has been growth at a reasonable price. In addition, we have a proprietary BMV framework which looks at the business, the management, and lastly, valuations. Essentially, this product will have a bottom-up stock selection focus with a top-down overlay, which is also common to our schemes. This fund, given that it is a flexi cap, it has no market cap restriction, so we'll be investing in large, mid, and small cap stocks. However, there is a theme, and the theme is rural and allied companies, and that would be the universe for this fund. So moving to the key criteria, essentially, like I talked of businesses, we like businesses which are scalable, sustainable. But in this case, these would be businesses which are primarily in the rural and allied activity segment. If one looks at management, we like proven management with strong execution skills, especially in rural India. When we look at valuations, we are looking at reasonable or attractive valuations basis the growth prospects. Some of the financial metrics we look at very closely are in terms of ROC, we look at cash flows, and possibly manageable leverage that the company possesses on its balance sheet.
So, how do you see the government policies or the rise in dual income households, the shift in employment from agriculture to non agriculture, influencing your investment decisions?
Sure, and I think you've raised important points, so I will delve on each of them. So yes, government spending is a key pillar. We do anticipate continued strong government spending in rural India. Keep in mind that this is over 60% of India's population. So the net result is what we see, standard of living in rural India is bound to increase. And with that increase in standard of living, we do anticipate a strongly different consumption pattern going forward. You delved on a very important topic, the rise in women participation in the workforce. So as we see as dual income households increase, and if I look at data points available, historically, say in 2018, only 22% of households in rural India were dual income. If we go back to a recent past, say 2024, this number has moved as high as 42%. So as dual income households increase, we do see premiumization also take part in rural India. We did cover that aspect earlier, that once we cross the $2,000 per capita GDP, we see consumption pick up. So with all these factors, we do believe that consumption plays could be an important growth driver going forward. In addition, if we look at the economy itself in terms of rural India, we are seeing a lot of employment shift away from plain agriculture to other parts of the economy, such as manufacturing, construction, services. So all of these aspects will go into our stock selection and stock allocation. We would primarily prefer to play within segments where we see strong structural growth drivers, such as, say, consumer durables, telecom, automotive, premiumization of consumer staples. So we believe there's a wide swath of companies available where we can participate in these elements that you just articulated.
So, Mr. Khanna, rural India is often seen as volatile due to monsoons and agri cycles, right? So, how do you intend to manage these risks in this fund?
Sure, and I think this is very topical, right? Because we've just had a good monsoon, so people may wonder, if we don't have a good monsoon, what then?
Right.
This fund per se doesn't just invest in agri dependent, but essentially what we are looking is more in terms of rural linked sectors. Let me give an example. Essentially, as I mentioned, manufacturing, services, etc., are not solely dependent on agri cycles. And within the fund, we would prefer structural plays within the fund where we get to play a lot of the segments like I recently articulated or enumerated, such as durables, rural finance, telecom, which are not completely impacted by agri cycles. In addition, if I look at the fund per se, we are definitely looking at being agile, being able to dynamically allocate our capital. We will retain the ability to shift or rotate between sectors and have a lot more defensive names in times of heightened volatility within the market.
And lastly, for the investors considering this NFO, what is the ideal investment horizon?
Sure. So, given the positive structural aspects to this, we believe a multi-year rural transformation story, and the fact that these themes may take some time to play out, we effectively recommend a 3 to 5 year investment horizon for investing in this fund. Yes, they are near-term immediate triggers, such as the good monsoon that went by and possible a very strong Rabi season going forward, especially with the trends we are seeing in terms of rural demand pickup. However, the fact is that we yet recommend a 3 to 5 year period, largely because it helps or gives the ability to the investor to compound his capital over that period. And in addition, being able to ride out the short term volatility one may see in the future due to agri cycles or macro trends.
Thank you, Mr. Khanna, for joining us and sharing your insights on the new Kotak Rural Opportunities Fund. And we hope your approach to identifying the rural focused opportunities and managing the cyclical risk and aligning the long term development trends will actually give a perspective to our investors.
Thank you. It was great discussing with you.
We hope this discussion helps our viewers to understand that India's rural growth story can actually translate into a meaningful portfolio building opportunity. The NFO period starts from 6th November and closes on 20th November. For more such expert led conversations, stay tuned to Kotak Mutual Fund.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.